Welcome back, investors, to Ticker Time News. I'm Adam, and we have got a packed show today. We've got a lot to talk about. The market was very happy today, especially the S&P 500, especially this brand new, what is being called Truth Social. This thing is going wild. We're going to talk about this stock. We're going to talk about Tesla. We're going to talk about SmileDirectClub. We're going to talk about a lot of things today. I have got a jam-packed show, but remember, the most important thing about this show isn't really what I have to say. It's answering your questions. So if you have a ticker symbol company you'd like to talk about, just leave that ticker symbol in your questions in the comments, and we will go over it live on the show. I'll stop what I'm doing so we can talk about it. So let's just go ahead and jump right into it. So the S&P 500, 84% of the S&P 500 companies that have reported so far have beat their estimates, which has led to the S&P 500. And you can see on my screen here, this is a ticker symbol SPX. It's what I use in TradingView when I'm looking at the S&P 500 and trading off of it and getting my technical analysis from it. You can see it here on the screen. It reached a new all-time high today, right over here on the right side. Just barely eked one out, but it did it. And this has been a nice run up since breaking above its 50-day moving average. It's been very bullish, and it remains bullish right now. So the S&P 500 actually closed at 45.49. It was up 0.3%, while the NASDAQ also rose more than 0.9% to close at 15,250. Amid much better than expected reports from companies like Tesla, HP, Nvidia, and Netflix. Also, AT&T beat on earnings and subscriber growth, and a company I'm not sure many of you want to know about, but Blackstone, their profits nearly doubled. So we've got that. Meanwhile, the Dow Jones was down almost 50 points. It was being dragged down by a 9% loss in IBM after the company missed on its revenue forecast. The number of Americans filing new claims for unemployment benefits fell to 290,000 in the week ending October 16th. This is the lowest since March of 2020 and below market expectations of 300,000, as employers are retaining their workers due to an actual labor shortage on the market. Now, let's look at and think about the market on a more technical level, okay? A strong multi-day rally has pushed all major indices back above their 50-day moving average. And we can see that right here with the S&P 500. This blue line right here is the 50-day moving average, and you can see it is well above it. Since it broke above that 50-day moving average, it has been very bullish. But when it was below the 50-day moving average, it was more bearish, and it had those red days all mixed in with it. But now, not a single red day. Very bullish. Now, technically speaking again, this favors a more risk-on environment. Combine that with the retreat in volatility as the VIX dropped back to the 15s, and various sectors emerging with strength on the right side of their charts. Remember, when we're looking at charts, we like to see it go up and to the right. It's such a beautiful trend. I mean, look at the S&P 500 going all the way back to November here of 2020, this bottom. It's been up and to the right until we reached that all-time high back in September, the beginning of September. And then September and the part of October was very Oh, I lost my train of thought there. It was very bearish, okay? But we've now switched that. We're in more of a bullish posture. So concerns, I should say, over inflation and earnings, well, they're going to defer to price action for right now. The Dow Jones and the S&P 500 have recouped most of their September losses, setting back along their respective year-to-date highs. The Nasdaq has been improving as well, but faces a little more resistance within about 2% of its year-to-date high. Small caps, however, they remain the laggards of the bunch, sitting in the middle of its own 9-month range since February. Earnings season is well upon us, so the day-to-day reactions will play a significant role in price action for the next few weeks as we continue to get more earnings on different companies. Like, look at IBM today. Let me just put that in. Their ticker symbol is IBM. Okay, IBM, there we go. IBM, a huge loss, 9.56%, like I mentioned earlier. But since this is such a large company, it pulled the Dow Jones down and had it ended 0.02% down. If IBM would have been flat today, the Dow Jones would have been up. So a singular company can have a big impact on the overall market on itself. So just keep that in mind. But relative strength among areas like energy, lithium, uranium, transport, electric vehicles, crypto and blockchain, cloud computing software, solar, and retail discretionary should be monitored for opportunities as different companies report their earnings in those specific sectors. You should see good returns. Now, let's look at things with our bearish cap on and just see what we can find out there. From a bearish view, any signals of sellers regaining control back below 50-day moving averages in prior week's lows, well, that would be a red flag. And quite frankly, that's the only thing that I can see from now to the year end, all the way to December 31st, as acting as bearish in any sense. If a company is below or trading below its 50-day moving average, like IBM is right now from their big loss today, they are well below their 50-day excuse me, moving average, and that is something that would be bearish on the company. So keep that in mind. Watch the 50-day moving average. I've talked about it several times in several videos. It's a very important moving average because a lot of day traders, swing traders, momentum traders, they are watching that very closely, and it can affect your trades. Now, talking about individual stocks, I know I'm going to get to the I can't remember the ticker symbol right off the top of my head, but it's the Trump stock, I guess we can call it. It's a big winner today. It was up over 360 some percent. And if you made money in that trade today, congratulations. That was a big win. But we're going to talk about that in just a moment. There's, yes, DWAC. Thank you very much. We're going to talk about that in just a moment. I did do a trade on that today and made some money. Hopefully you guys did as well. But a couple things real quick before we get to that. AutoNation, ticker symbol AN. Now, the reason I want to talk about AutoNation, they're one of the largest, if not the largest, automotive seller in the United States. And seeing what they do can affect and give you guidance kind of on what the rest of the automotive industry is doing. Now, this is not referring to electric vehicles. We need to separate electric vehicles when we're talking about AutoNation here. Now, they had a big day, up 7.7%. Now, AutoNation, I would say, is shifting into high gear today as a little pun after beating on Q3 earnings and its revenue. With over 300 locations, AutoNation is the largest dealership in the US, I believe. I could be wrong, but I think it is, selling both new and used vehicles. AutoNation continues to benefit from an environment in which demand continues to outpace supply for new vehicles due to our supply chain issues that we have right now. AutoNation expects pent-up demand to support sales for the foreseeable future. That's what they said on their earnings call. So that is very bullish for the automotive sector. Now, I know that Kathy Woods thinks that consumers have already bought their cars and they're sitting in the garage right now and they're not going to be buying more. So demand, Kathy Wood believes, is going to be lower for automotives. Again, separating out electric vehicles. That's a totally different beast. Now, AutoNation reported another blowout quarter, like I said, with EPS more than doubling year over year to $5.12, which is a 92-cent beat. AutoNation has now posted 6 consecutive EPS beats by more than 42 cents. That's incredible for this company. It has been doing so good. And like the S&P 500, when we were looking at the ticker symbol SPX, up and to the right is what the chart looks like. And it did have a couple of bumps leading into earnings back in June, but then shot up, had again a pullback. Again, before earnings here, had a dip here in September, and it shot up. Nice gap up here today. Let's see if they can hold it. They are above their 50-day moving average, and you can see when they had their latest pullback here in October, they sat on their 50-day moving average as support. Again, that's why that average is so critical. Now, let's go to another company. It's a favorite of mine, and it's Tractor Supply, ticker symbol TSCO. Now, I know this is a bit of a expensive stock. $210 is where they finished at today, and that's up 4%. But why am I talking about Tractor Supply? Are people going out and buying tractors? Not necessarily, but in a way. See, Tractor Supply, it has plowed forward as a potent consumer transplant for seeds and stronger growth, okay? This company is on fire. And we're going to talk about some of the reasons why and what trends can we learn from their earnings report. So a well-known shift that I'm sure all of us are aware of is that consumer spending activity has emerged during the pandemic and was the prioritization of home improvement products over travel and entertainment options. This monumental change in consumer behavior, well, it generated a windfall for companies like Home Depot and Lowe's. Home Depot's ticker symbol is HD, Lowe's is LOW. Now, a similar but less talked about consumer trend is the rising interest in recreational farming, self-sustainability, rural lifestyle, and general outdoor activities. The pandemic has pushed people from inner cities out into the suburbs, and from the suburbs out even into rural areas. Now, at the center of this movement is Tractor Supply, and that's why I'm talking about them. The largest rural lifestyle retailer in the US. Before the open, the company reported its 3rd straight beat and raise earnings report this year, which included its 6th straight quarter of 10% or more comparable store sales growth. That's spectacular because you think about the retail landscape and it's just been moving more to a digitalization and more of online consumers, but it's not necessarily true for Tractor Supply. They almost have a secret weapon that they can use. Excuse me for a quick moment. Oh, thank you. Sorry about that. Okay, so what's really impressive with Tractor Supply is that Tractor Supply still produced a comp increase of 13.1% despite lapping robust growth of 26.8% in the year ago quarter. And what comps are basically what you did last year compared to what you're doing this year. Now, since we had tremendous growth this year in a lot of retail companies, next year their growth is going to be a bit smaller as we're looking from 2020 to 2021 growth, and then from 2021 to 2022 growth. Well, it's not going to look as big even though they're growing, because back in 2020, sales were down tremendously for a lot of retail companies. They jumped big in 2021, but then their jump from 2021 to 2022 isn't going to be quite as big. So that's when people talk about comps, that's what they are referring to. Now, strength was broad-based across product categories, with solid demand seen for everyday merchandise and, of course, summer seasonal categories. Like virtually every other retailer, Tractor Supply is grappling with supply chain pressures and labor shortages and significant cost inflation. We see it all around us. Everything is going up. Although the company implemented management actions to offset these headwinds, gross margins still decreased by 41 basis points year over year to 36%. The modest dip could have been much worse if not for the business environment, which its CEO described as the best it's ever been. Beyond the customer trend tailwinds, Tractor Supply is also benefiting from its multifaceted, quote, life out here strategy. A key component of this initiative is to advance its one tractor capabilities. Now, when it's one tractor, it's spelt with one word. It's a branding for Tractor Supply, which focuses on integrating its brick and mortar operations with its digital operations. I bet you thought we were really talking about tractors there, but we weren't. Now, in an area where Tractor Supply has seen considerable success is in its buy online, pick up in store service. This is reflected in Tractor Supply's e-commerce channel, registering double-digit growth for 37 consecutive quarters. So they are growing digitally, but there's a point here I'm trying to get to. The pandemic has pushed retailers, including Tractor Supply, to bolster their digital capabilities. But the company is more insulated from online competition than most other retailers. Product categories such as light farming equipment and tools are better suited for in-person shopping. That's their secret weapon that they have. Relatedly, Tractor Supply has more aggressive store expansion plans than many retailers, targeting 80 new stores by fiscal year 21. Tractor Supply's improving fiscal year 21 guidance really puts its momentum into perspective. When the company reported Q4 20 results on January 28th, it guided for fiscal year 21 EPS, or earnings per share, of $6.50 to $6.90. After 3 straight blowout quarters, the guidance range now sits at $8.40 to $8.50. That's about a 25% increase at the midpoint. My playbook for Tractor Supply. Tractor Supply continues to capitalize on a potent ruralization consumer trend that shows no signs of slowing down. When combined with a significant runway for store count expansion, the favorable business climate makes Tractor Supply an intriguing story in the retail space. I would say stock up on weakness. When the stock pulls back and tests its 50-day moving average, or around $200 a share, that's when I would start to buy. Now, of course, you make your own decisions, of course, and do your own due diligence, but that's what I think about Tractor Supply. Now, there's another company, it was in the headlines today, I just want to touch on it, and that is WeWork, ticker symbol WE. When you see the candlesticks here, it's not going to be very many. There we go. That's it. That's all we've got. And again, this is looking at the daily chart. So again, not very many candles. It's kind of funny to look at, but they were up 13.4% today. Now, WeWork was an IPO that crashed and burned a while ago, but it's making its comeback via a SPAC today. WeWork is a commercial real estate company that provides flexible shared workspaces for technology startups and services for other companies. And that got wrecked in the pandemic. So WeWork kind of reworked itself and is designing and building physical spaces, but also virtual shared spaces and office services for entrepreneurs and other companies. So it was in the headlines today. I just wanted to touch on them. I'm not sure about buying yet because they do have a lot in real estate, and I'm not sure that everybody is going to go back to an office building, but them building virtual spaces as office spaces does seem kind of intriguing to me. So I would watch it to see what happens. Now, another company to talk about here just for a little bit is SmileDirectClub. Yesterday evening, I did get a comment asking about SmileDirectClub. So I do want to look at SmileDirectClub here and point out a couple things that I have seen. Number one to talk about here is you can see on the screen it has been in a downtrend after reaching a high back in January. So for the entirety of this year almost, it has been bleeding out and sinking. And you can see a few holes here in the candlesticks where they have gapped down. Now, recently, well, not really recently, but middle of August is when they hit their bottom. And then you can see now in these two yellow lines here on the bottom right of the screen. The bottom one is support. The top one is resistance. Now, it has this nice chart pattern that you would call a symmetrical triangle. That's what this chart pattern is. Now, it can mean a couple different things, okay? This represents a period of consolidation before the price is forced to either break out or break down. And you can see that since reaching its low here back in August, it has been consolidating within these two lines. Still, it's staying within the major purple line, which is the downtrend of it. It is using that as resistance as well. Now, a breakdown from the lower bar right here, the lower trend line, that would mark the start of a new bearish trend for the stock. So as it's moving towards its nexus point, so as price begins to tighten, it's not making higher highs, but it's making lower highs, and it's making higher lows. That's when the price is tightening. And as it reaches a nexus point, that's what I like to call it, it's going to do one of two things. It's either going to break down and just fall, and I can show that here real quick. It's either going to reach this point right here and then just go down like that, or it's going to reach a point on the opposite side where it will break out. Those are your two choices. Typically, a continuation pattern isn't what's expected when you see this type of chart pattern when you're looking at technical analysis. Now, since it's been in this downtrend, this could be a reversal of trend. We have to watch it really closely. There's two things that you need to see if you're going to expect this to break out and go up. You want to see, let me go back to my drawing tool here. You want to see high amounts of volume, okay? Like right here is a patch of volume that is significantly higher than, let's go back to this uptrend right here. If we look at this patch right here where it was consolidating, let's just leave that line there. Let's crunch it up a little bit. And if I put a guide right on top of this, we can see that the volume, it does not match up at all. The volume on the right side over here is much higher than the volume on the left side over here, where you could say it was also consolidating in price. But you could also say there was a head and shoulders pattern here as well, which led to this massive green candle here. So just looking at this, you've got to watch for volume to pick up as it reaches its nexus point, and you want to see relative strength moving up as well. And I just draw that here with a line in the relative strength area down here, or RSI. You want to see that moving in the upwards direction. And if you have those two things combined with price tightening, then that's when you could see a breakout. Otherwise, if volume is going down, relative strength is going down, you'll likely see a breakdown of this stock and move into a more bearish pattern. That's what I see technically on the chart for SmileDirectClub. I know the company has been on Wall Street Bets and Reddit forums lately. And if you go to Top Stonks, spelt with an N instead of a C, topstonks.com, it actually shows you the top 10 companies mentioned on Wall Street Bets. And for a while, SmileDirectClub was in the top 5 on Wall Street Bets. And you could have seen that possibly at the same time that you saw the volume rise right here on this chart. But since SmileDirectClub is no longer in the top 10 mentions on Wall Street Bets, then maybe this stock doesn't have the potential as you might think it does. So just be careful. You can, again, monitor for mentions of SmileDirectClub here on topstonks.com. And on the technicals, again, you want to watch for volume rising, and you want to watch for relative strength rising. If it's being mentioned on Wall Street Bets, volume's increasing, relative strength's increasing as the price is tightening, then you could see your breakout and shoot up to the moon for a nice gain on the stock. Otherwise, it could be going bearish as it continues this symmetrical triangle right here. So that's what I think about SmileDirectClub. I don't know why I want to keep saying Smile Club Direct for some reason. But anyways, that's them. It's what I would suggest that you watch on the charts. And again, if you don't have a charting tool that you use, you can use tradingview.com. We do have a link in the description to get you there if you would like, but you can use it for free. It's got a base package that you can get for a few bucks. But it's where I do all of my charting for stocks. I love all the tools that they offer there as well. Okay, moving on, I want to look at Bitcoin. We got to look at Bitcoin. It has been doing wonderful. Okay. Right now, Bitcoin is at $62,908. So if I go out and open this up a little bit, this is the day chart for Bitcoin. So each candle represents one day. Now, right now, Bitcoin, it broke above this price target, and we talked about it here on the channel. And this was 63,500. And it broke above it, it back tested it, and stayed above, okay? But now it's fallen below this price line right here, and it's not acting as support anymore. It could be turning into resistance, and that's not something that we want to see if we want Bitcoin to rally for the rest of the year. So if we go to a 1 hour chart to get a better look at this, you can see right here is that line at 63,500. Okay, right here where my mouse is wiggling around. It might be harder to see, so let me do this. I'm just going to draw a line. It's not as straight as I'd like, but there we go. So that's the 63,500 mark right there. That's where Bitcoin is having a little struggle to stay above. But you can see over here on the left side of this blue line that I drew, you can see it acted as support for a while right here, for a couple days, for 2 days, and then it shot up, but then it hit a new all-time high, okay? 66,000, well, let's call it 67,000 even, as a new all-time high. But then it fell down and broke apart. So there are probably some traders waiting for Bitcoin to hit its all-time high, take some profits on the trade, and that's why it's been coming down. But now that it's not breaking back above this line, that's just a little red flag to pay attention to. It's also broken down below its 50-day moving average. And if I scroll out here a little bit, you can see that the most recent rally, and I'll link around these candlesticks here. Here's the trend line for the 50-day moving average, okay? And you can see all of these candlesticks right here, they were above the 50-day moving average. So that was very bullish for Bitcoin and breaking above this resistance line at a price target point, okay? Now that it's below its 50-day moving average, you can see, I should use a different color so it's not so, okay. Let me draw this circle right here. Now, this is an area, I'll change that color so it's not the same. This is an area where Bitcoin was below its 50-day moving average. Its 50-day moving average was acting as resistance, while over here in the orange circle, it was acting as support. So we could see something like this red circle happen right here where we are with price action right now for Bitcoin, where it's going to consolidate a little bit before going higher. Now, I firmly believe that Bitcoin is going to go higher this year. I can see it reaching 75,000 by the end of the year. I know a lot of people on the internet are calling for 100,000 by the end of the year. I can't see that, but that doesn't mean it won't happen. So we'll just watch it, keep our eye on it. I'm still bullish on Bitcoin, even with this recent development. Okay, so that's Bitcoin. That's what I want to talk about. Next thing that I want to talk about is Tesla. Now, we listened to Tesla's earnings call yesterday, ticker symbol TSLA for Tesla. Now, we listened to their earnings call yesterday, and it was spectacular. And guess what Tesla did today? It set a new all-time high. Almost. It was within pennies. It got to $900 even. And its all-time high is $900.40. I can't believe it, guys. We couldn't get another, say, 41 cents to set a new all-time high today. So maybe that's coming tomorrow. We'll have to wait and see. But man, oh man, it was so close. I couldn't help but laugh at this. It was interesting watching it. But excuse me for one quick second. Okay. So the reason Tesla has run up 3.2% today and got to $900, it smashed earnings and came, like I said, pennies away from setting a new all-time high today. $900 even. But Tesla, it is speeding past supply chain roadblocks to deliver another impressive quarterly report. Already contending with semiconductor shortages and severe shipping disruptions, chip shortages, supply chain headaches, rolling blackouts due to energy crisis in China, added another major hurdle for Tesla in Q3 21. Incredibly, though, Tesla, which of course is an electric vehicle manufacturer, among other things, managed to continue to steer around those roadblocks, delivering another strong upside earnings report that featured a 73% surge in deliveries. As impressive as the delivery growth is, the performance would have been even better. I know it was great, but just imagine how great it's going to be when Tesla is able to have all of its factories running at full capacity throughout an entire quarter. Wow, those results are going to be mind-boggling. Now, while demand for Tesla does remain robust, Tesla's operational efficiency, well, it continues to get better. Just when you think Tesla has managed to eke out its most efficient manufacturing process as possible, it manages to do it even better. It's pushed its automotive gross margin higher by 281 basis points year over year to 30.5%. The company achieved this despite experiencing a 6% year over year drop in average selling prices. So their cars, even though we have seen price increases, the average selling prices did go down by 6%. Now, when we see prices go up on their cars, we're seeing that as like an MSRP. Of course, you can work deals to get it a little bit at a better rate, but moving on from that. So they were able to do that while commodity prices also increased. So it's just amazing. All the prices are going up everywhere around us, but Tesla was able to pull the cost down by 6%. A key factor behind Tesla's rising margins is the ramp up of production at its Shanghai factory. Overall, Tesla is executing remarkably well in an extremely challenging environment. As far as my playbook for Tesla, it really boils down to you're either in Tesla or you're not. You either believe in the company or you don't. I know they have split their stock, their share price. It's back up to $900 again. It's very expensive. Maybe we'll see another stock split in the future for Tesla. I would imagine that we would. But I am a very big believer in Tesla. When you look at everything Tesla actually does with their electric vehicles, with the robo-taxi, their autonomous driving, with the solar that they have, even though that's not a huge part of what they do, I think it could be if they put maybe a little more effort into it. Right now, of course, they're focused on the vehicles. But there's a ton of potential for Tesla. Tesla can actually be a multi-trillion-dollar company, much bigger than the 2 or so trillion of Apple, much bigger than Microsoft. I mean, think, Apple, well, they have software, they have hardware. Tesla, they've got software and hardware. Their car, Elon Musk has said, is a big computer on wheels. And then you've got Microsoft. Well, it's got technology, software. Tesla's got software. I mean, you can look at all these different companies and then look at Tesla and say, wow, Tesla does all these different things that all these different companies do. So even talking about their supercharger stations and increasing that network by 3x in a few years, that's going to help boost other charging companies. I just hope that they can all be on a same page when it comes to the inputs for the electric vehicles and the charging stations, so there's not 10 different adapters we have to go through like when cell phones first came out. So that's just a few thoughts there on Tesla. I love the company. I'm in the company. I hope you're in the company. But of course, do your own diligence and decide for yourself if it is for you or not. Okay. The SPAC, Digital World Acquisition. I remember the name. And the ticker symbol DWAC. This thing could be your very next, I don't know. I really don't know. This is going to be, let me go to, I would probably have to go to a much smaller chart. This is a 1 hour chart of its day. It was up 356%. It's up another 28% in after hours. This is a SPAC, a special purpose acquisition company, that is bringing, believe it or not, Donald Trump's new social media company called Truth Social public. Now, I've read articles about this today. I've looked at the investor deck. It's more of a framework for a social media company, but quite frankly, I don't think this is going to trade on any sort of fundamentals. I think it's going to just be all emotion and all political. I really do. Here's what I can say. If you are going to trade this, and again, I said trade this. I did not say invest in this. If you're going to trade it, then you want to be in and out. The best thing that you can do when you're trading it is set a trailing stop loss, okay? That means as the stock rises, your stop loss also rises with the stock, okay? And then if the stock falls, it triggers your stop loss and then it sells, okay? That way you can lock in your profit because this thing is going to swing wildly. There's going to be big up days. There's going to be big down days, okay? Probably the most important advice that I can give you is to be careful. Get in, get out. Remember, this is going to be traded heavily. When do day traders get out? Right before market closes. So we'll see. Okay. I made a trade on this today. Nice profit. If you did, congratulations. But please be careful with this. It's going to be political. It's going to be emotional. It's going to go up. It's going to go down. All right. A couple comments. Let me read these here. Couldn't find earnings except maybe a 740 million loss last quarter. Do they have a product yet or just an idea? Just an idea, a framework. Let me see if I can find that investor deck. Again, let's see. All right, I'm looking for it right now. Let's see. Oh, there's got to be a link for it here somewhere. Gave a small profit to ACLU. Not for me. Yeah. What's your thoughts on SDC, Smile Club Direct? I did talk about Smile Club Direct earlier in the stream. I can go back and talk about them again. I'm just looking real quick here for the investor deck. Did I find it in the press release? I know it was buried and hard to find, and I did not save it. Let's see. No, I'll email investor relations here, and maybe I can get another copy, and I'll look for it, and we can go look at it tomorrow in more detail on the live stream. I don't want to just sit here researching. Yeah, nibbled on it a little today, but the price may get better tomorrow. That is true. When looking at DWAC, it's going to be, there's going to be like a peak media with this, I think. Right now, people are just learning about it. On all the mainstream finance media news sites, they were talking about Donald Trump and Truth Social and how high this stock has been running today. Well, people are going to FOMO right into this thing. Tomorrow could be another several 100% day. I don't know. It could be the next GameStop, maybe. But just be careful if you're trading it. It's up right here on the right side of the screen. I know it could be hard to see if you're on a smaller screen, but it's up 25, 26% in after hours right now. If you do set a stop loss, set a trailing stop loss so you can get your profit, but be careful with that. Okay, let's see here. Yeah, let me pull them up, and then I'm gonna go to SmileDirectClub real quick just to talk about that. Real quick. I gotta click on the screen. I wasn't on it. Okay. SDC, SmileDirectClub. And I'm just gonna give if you want to go back in the stream a little bit, we were talking about SmileDirectClub in greater detail. But let me give you the quick rundown here for SmileDirectClub. There is a very interesting chart pattern that's happening here, and you can see we still have our drawings on here from where we talked about it earlier. All right. Okay, so right now, all right. First off, SmileDirectClub. Here's the quickie for it. The two purple lines going down across the screen. This is the big trend line for it. It's in a downtrend, and it's been doing so since January, the end of January. But once it reached the middle to end of August, it reached a floor of somewhat support. And this orange line on the bottom, and then you have an orange line on the top, they are converging together. At some point, those two lines would intersect. That's your nexus point. And what that's doing is the price on the bottom, you're making higher lows. The price on the top is making lower highs. So the price is tightening as it moves along in time. Now, once it reaches this nexus point, it's either going to break up, go up, or it's going to break down and fall down, okay? So what you have to look for when this reaches its nexus point, if it gets to the top line, for it to break out and run up, you have to see volume increasing. You also have to see the relative strength index also increasing. If you have those two things, and if you go to topstonks.com and you see Smile Club Direct is back in the top 5, and this is topstonks.com. Again, it tracks the mentions of stocks on Wall Street Bets. So right now, this is the top 10 stocks that they're talking about. Smile Club Direct was in that top 5 group where you see this volume right here that increased, okay? So as the price tightens and it gets to this nexus point over here, if volume is up, relative strength index is up, and talk of SmileDirectClub is up, then you would most likely see a breakout to the upside, and you would see a pretty massive run. That's what I see in the short term for SmileDirectClub, ticker symbol SDC. The long term, I'm not too sure. I only did a little bit of research last night. Long term on it, the company does seem relatively consumer friendly, which would obviously make it easier. There's a big, I think, misconception people have to get over. Most people are used to going to a actual dentist office to get their teeth fixed and aligned. But Smile Club Direct does have a very unique business proposition here and business plan and model that I think could work, but they're going to have to do a lot of marketing. But I think it could work long term. All right, let me hop over to the VLTA, and I do love their business model. All right, so this is the daily view for them right here. And you can see I had my alert set right here for $6.93. It triggered that mark. Let's go to the 1 hour view to get a better look at this. So yeah, so once it fell below this mark right here, it had a nice pickup right here. Nice shoot up in volume. It was oversold for a moment. It got up to 77 points. And again, 70 and above is, overbought. Excuse me, overbought. So yeah, I wonder what caused this massive run up for it. 6.3% today. I mean, that's really good. Could it have been the news from Tesla yesterday that Tesla is going to increase their charging network by 3x in a few years? Maybe that could have been some good news to send it up, because there's definitely nothing new here in the news for them. Yeah, just the old floor and decor deal. That's the latest news I can see for them. So yeah, this is very promising. This right here, and this could have been all Tesla, quite frankly. That's what I think it could have been. But that's good to see that nice massive pickup there. Honestly, I freak out on research when it goes down. I have no idea what the trigger was other than technicals. Yeah, but I think Tesla could have been a possibility. If Tesla is going to increase their charging network by 3x in a few years, then obviously Tesla is going to be like other charging companies are going to ride the I've lost my train of thought, coattails of others. That's what I think. So Tesla's pulling the others up. I wonder if ChargePoint jumped today as well. I haven't looked to see. Oh, wow. Yeah, ChargePoint was up nearly 4% today. So that could have been a reason Tesla is pulling all the other charging networks up. That's what my theory would be, especially seeing ChargePoint up 4% today. Let's see. You've got SESN has been a trader's paradise for a few days. Yeah, big gap up right there. 55% in a month. Wow. 41% came within the last week. The technicals right now show that it's neutral, so that's a hold signal. Missing on earnings. I am not familiar with this company, so besides looking at technicals on it, there's not much that I can say on it without diving into it. But yeah, what caused that big gap up? Do you know? Let's see here. Hours. Huh. Okay. Was it the FDA granted request for a meeting to discuss issue? Oh, bladder cancer drug application. But there were issues. Stock jumped 17% after hours. So FDA grants since in Bio's request for meeting on bladder cancer drug application issues. Stock jumps 17% after hours. Huh, interesting. Yeah, just reading your notes there. Got it. Okay. Interesting. I personally have not looked into them, but yeah, all I would say is be careful when you have gap ups like this. It could be a slow bleed out, but if you're trading it, yeah, that's good. It's above its 50-day moving average, obviously, because it's up above that, that had that big gap up. But wow, look at that gap down right after earnings there. How bad were they? They had earnings, a EPS of a negative 15%, 15 cents. Estimate 6 cents loss. I keep trying to get out, but then it dips for me. Yeah. Did you have it up here when it was in the $4, $3 range? Let me go to a one-day chart to get a better overview. Okay. Well, being in it at 1, that's not too bad. Earnings are 25 days away. With them missing earnings, I mean, going back to 2018, it looks like from 2018, they've only beat 3 quarters, 3 different quarters. Let's see, this was, that would have been May. So it looks like they only beat in May, but this year in May they missed. Okay. All right. Well, that's what I wanted to go over today. Was there anything else that you guys wanted to talk about? Otherwise, I think I'll wrap it up here. It was described as a long hold, but then that happened. Okay. All right. All right. So like I said, that's all I wanted to talk about today. We covered a lot of different industries and companies. If you guys are satisfied, then I am satisfied, and we'll do it all again tomorrow. I just want to say you are welcome and thank you. I appreciate it very much. Just want to say one last, let's see, where is it? If you are trading on the Trump stock, just be very careful and make sure to set a trailing stop loss and be very careful. Get in, get out. Other than that, we are good to go. And I guess we'll wrap this up with a thank you for being here today. Thank you for your questions. I love the conversation. Obviously, that's the best part of this live stream. So thank you all very much for watching, and I will see you in the next video.